Hello viewers, welcome to my channel. I'm Hasham. So far we have completed 16 problems on budget. Presently the subject going on is managerial accounting. In this subject the topic is budgets and budgetary control. So in this subject already I have uploaded the videos on marginal costing, decision making, and right now it is going on budgets. So if you are regularly watching these videos, definitely you got a good command on the subject managerial accounting. Marginal costing, so many problems we have done, and in this budget I have prepared the video on the meaning of the term budget, what are the different types of budgets, how to make the budgets. All these things I have explained in the first video, that is introduction, theoretical part. So before starting the problem, I expect my viewers to regularly watch the introduction part. Without understanding the concept, don't go for the problem. Otherwise mechanically you can be able to know that this item should be taken there without understanding the logic. That is not a good way of learning. Learning means completely theoretical knowledge you must have. So I suggest you to watch the first video on introduction theory, and then starting problems are very important. So far 16 problems I have already completed on different types of budgets. Production budget, purchase budget, sales budget, manufacturing overhead budget, cash budget. So many budgets we have prepared in the previous videos. So watch the videos continuously, one after the other. Definitely you will get a good command. First time if you are on my channel, I suggest you to visit the playlist of my channel. I have uploaded the videos on different subjects like financial accounting, cost accounting, advanced accounting, management accounting, different types of problems I have uploaded. Select your subject, select the topic, select the video, watch the video. Definitely you will gain a lot of knowledge from these videos. So now I am going to start the next problem, that is 17th problem. But before starting the problem, I expect my viewers to have a printout of the problems I have given in the link under my description. So take a printout and keep it ready before starting the problem. I am reading out the 17th problem. From the following forecast of income and expenditure, prepare a cash budget for months January to April. January, February, March, April. 4 months budget we have to make. Months: 1999, November, December. 2000, January, February, March, April. 6 month data is given. 2 month data for last year 1999, November, December, and current year 2000, 4 months data. So credit sales, sales are given, credit sales, purchases are given, wages, manufacturing expense, administrative expense, selling expense. Additional information is as follows. The customers allowed a credit period of 2 months. The customers are allowed a credit period of 2 months. That means when the business sells the goods on credit to customer, the customer will make the payment after 2 months. For example, in November 30,000 rupees are the credit sale. The credit sale of November is 30,000. They will make the payment in January, because November to December 1 month, December to January 2 months. So whatever sales we conducted in November, the payment we will receive in January. Similarly, the sales of December will receive the amount in the month of February. So 2 months credit period we are allowing to the customers, right? This point you have to remember while taking the collection from customers. A dividend of 10,000 is payable in April. This dividend payment is not a recurring payment. Every month will not be paid dividend. The dividend will be paid occasionally. So non-recurring item. Only in the month of April will take dividend paid. Capital expenditure. The capital expenditure is also non-recurring. Every month we will not spend the money on capital expenditure, like purchasing the asset. So non-recurring item. Now we have to see in which month. The plant purchased on 15th January for rupees 5,000. So in the month of January we are going to take 5,000 rupees payment for purchase of plant. A building has been purchased on 1st March and the payments are to be made in monthly installment of 2,000 each. Building is purchased but payment is made monthly basis from March. So March, April, 2 months we are going to take payment for building purchase. Then creditors are allowing a credit of 2 months. Just like we are allowing 2 months credit period to the customers, the suppliers are also allowing us a credit period of 2 months. That means whatever purchase we make in November, November purchase are 15,000. It is given in the problem. November purchase are 15,000. Will make the payment in January. So 2 months credit period we are getting from the supplier. So purchases of November will be made payment in the month of January after 2 months. And wages are paid on the first of the next month. The wages are paid on the first of the next month. That means November wages will be paid in December. December wages will be paid in January. January wages will be in February. Then lag in payment of other expenses 1 month. Just like wages, the other expenses also delay in payment is 1 month. November expenses will be paid in December. Then balance of cash in hand on 1st January, beginning of the budget period. Beginning of the budget period, 1st January, the opening balance is 15,000. That's all. From this data, we are required to make the cash budget for 4 months. So cash budget for 4 months, January, February, March, April. So 4 columns I have prepared: January, February, March, April. Receipts, collection from debtors. There are no cash sales. Normally cash sale and collection from debtors, 2 items. But in this problem, there are no cash sale. All sales on credit. So collection from debtors, only 1 receipt. Now payments: dividend, plant purchased, payment for building, payment for purchases, wages, manufacturing expense, administrative expense, selling expense. These are all the expenses, payments. So receipt, payment. A is the receipt, B is the payment. A minus B. If positive value, surplus. Negative value, deficit. Then opening balance. Opening balance on 1st of January is given in the problem. Last line it is given. Opening balance 15,000. So this surplus and opening balance, you add up, you will get the closing balance. That's it. This is the format. Now we'll take one by one. Now we have to find out collection from debtors. We are allowing 2 months credit period to customers, to debtors. Debtors are the customers, right? 2 months. So November sales will be collected in January. How much are the November sales? 30,000. 30,000 are the November sales. This will be collected in January. Similarly, December sales 35,000 will be collected in February. Then January, sales of January 25,000 will be collected in March, 25,000. Then February sales are 30,000. The sales of February 30,000 will be collected in April, 30,000. Over. Receipts completed. Now payments, dividend. The dividend is paid in the month of April, 10,000. So April month, 10,000. Plant purchased. Plant was purchased in January, 5,000 rupees. So 5,000 rupees January plant. Payment for building. Building was purchased and payment made in installment of 2,000 from March. So March, April. March, April 2,000. Next, payment for purchases. Payment for purchase are made 2 months, after 2 months. That means the November purchases will be paid in January. How much are the November purchases? 15,000 November purchases. This 15,000 will be paid in January. 15,000 January. Then after 15,000, 20,000. 20,000 will be paid in February. 20,000 ke baad 15,000 will be paid in March. 15,000 then 20,000 will be paid in April. That's all. Now wages. Wages time lag is 1 month. The wages of November will be paid in December. December wages will be paid in January. So December wages are 3,200. So we have taken 3,200 here wages. After 3,200, 2,500. 2,500. After 2,500, 3,000, 2,400. 3,000, 2,400. That's all. Manufacturing expenses same, 1 month delay. The manufacturing expense of November will be paid in December. December will be paid in January. So December you see how much are the manufacturing expense? 1,225. So 1,225. After 1,225, 990, 1,050. 990, 1,050. Then after that 1,100. Administration expenses same, 1 month lag. 1 month delay. So December administration expenses are 1,040. So this 1,040 will be paid in January. 1,040. After 1,040, take the 3 amounts. After 1,040, 1,100, 1,150, 1,220. 1100, 1150, 1220. Selling expenses, exactly same, 1 month delay. So December selling expense are 550. So 550 I have taken in January. Then after 550, 600, 620, 600, 620 and 570. That's all. We have taken all the values. Take the total of B. Total of B, payment. Now surplus or deficit A minus B. 30,000 minus 26,015, 3985. 35,000 minus 25, 9810, surplus. 25 minus 22, surplus. Here 30,000 minus 37,290, you are getting negative deficit. 7,290 deficit. So surplus 3 months, deficit 1 month. Now opening balance on 1st January is given in the problem 15,000. 15,000. Now surplus 3,985 plus 15,000. 18,985 is the closing cash balance of January. This closing cash balance of January will become opening cash balance of February. This 18,985 will become opening balance for Feb. Now add up 28,795 is the closing balance of Feb. This will become opening balance of March. Add up 30,975 is the closing balance of March. This will become opening balance of April. Now here you have minus 7290. So 30,975 minus 7290, you get 23,685. That's it. This is the 17th problem. Now see the 18th one. National Products Limited. National Products Limited wants to approach its banker for temporary overdraft facility. Normally overdraft means a loan, temporary loan taken from bank, that is called overdraft. So when overdraft is required, when in a particular month payments are more than receipts. If a business finds that the payments required is more than the receipts, there is a need of bank overdraft. So here it is saying wants to approach its banker for temporary overdraft facility for quarter beginning from 1st October. Quarter means 3 months. Beginning from 1st October to October, November, December. So we have to make the budget for 3 months, October, November, December. During the period of these 3 months, the company will be manufacturing mostly for stock. You are required to prepare cash budget for the above period from the data indicating the overdraft facility required by the company at the end of each month. We have to find out how much overdraft necessary required at the end of each month. The data given August, September, October, November, December. 5 month data is given, but we require to make the budget only for 3 months. Sales are given, purchase are given, wages. 50% of credit sales are realized in the month following the sales and the remaining 50% in the second month following. This is the only complicated point in cash budget. How to find out the collection from customers. The goods are sold only on credit. It is given in the problem no cash sales. All the goods are sold on credit. 50% of the sales are collected in the next month. Remaining 50% again in the next month. Simple example, if 1 lakh rupees are the credit sales of January, 1 lakh rupees are credit sales of January. So 50% of 1 lakh, 50,000 will be collected in Feb. Remaining 50,000 will be collected in March. That means we sold the goods in January, but the collections are made in February and March. 50% in February, remaining 50% in March. This is the pattern of collection. Then B point. Creditors are paid in the month following the month of purchase. Creditors means suppliers from whom the business has purchased the goods on credit. They are called creditors. So creditors are paid following the month of purchases. That means when we purchase the goods in January, we will make the payment in February. When we make the purchase in February, we will make the payment in March. So 1 month delay in making the payment to creditors. Estimated cash at bank on 1st October 1996 is 50,000. This is the opening cash balance. Opening cash balance on 1st October is 50,000. That's it. So comparatively very easy problem. See here. Cash budget for 3 months ending 31st December 96. Thousands omitted. To simplify the calculations, I ignore 3 zeros. Just example, 3 lakh. If 3 lakh is there, last 3 zeros I am ignoring. So I am writing only 300. So in reality, when I write 300, it means it is 3 lakh. So 3 zeros omitted. Now October, November, December. Receipts, collection from customers, only 1 receipt. Then payments, purchases and wages, only 2 payments are there. A receipt, B payment, surplus or deficit, A minus B, opening balance, cash balance. This is the format. The first calculations are regarding collection from customers. In working note, I have made the correction. Concentrate here. Collection from customers, thousands omitted, rupees in thousands. Now August, September, October, November, December. 5 month data is given. So I have taken all 5 months. So total sales. In the problem it is given 3,60,000. So I have ignored 3 zeros. I have taken 360. Here 3,84,000. So I have ignored 3 zeros, 384. Then 216, 348, 252. These are the total sales. Now collections. 50% of credit sales are collected in the next month. 50% of credit sales are collected in the next month. What is the total credit sales here? 360. 50% of 360 is 180. 50% of 360 is 180. 180 will be collected in next month, September. So half of 360, 180, next month. Half of 384, 384 into 50%, 192. Then 216 into 50%, 108. 348 into 50%, 174. So 50% of current month's credit sales will be collected in the next month. Now remaining 50% in the next second month. Remaining 50% in the next second month. Example, August 360. Out of 360, 180 collected in September. Remaining 180 will be collected in October. So out of this 360, 180, 180, 360. So out of 360, 180 collected in September, remaining 180 in the month of October. Similarly, 384. Out of 384, 192 collected in October, remaining 192 in November. Right? Similarly here 216. Out of 216, 108 collected in November, remaining 108 will be collected in December. That's all. Now take the total. We don't have any collection in August. Then September 180, October 192 plus 180, 372, 108 plus 192, 300, and 174 plus 108, 282. Now we require the collection for 4 months, October, November, December. 3 months, sorry. 3 months, October, November, December. So October, we have 372. We don't require September. Here it is September is there, but we don't require. We want only October, November, December. So 372, 300, 282. So this 372, 300, 282. These are the collection from customers. Now purchases. Purchases are paid 2 months. 2 months time. 2 months or 1 month? 1 month I think. Payment for purchase is for after 1 month. 1 month. Next month. So August purchase 249,600. This will be paid in September. And September 288. September 288 will be paid in October. So October 288. Right? Similarly, October 486. October 486 will be paid in November. Similarly, November 492. November 492 will be paid in December. That's all. Then wages. Nothing is given regarding wages. No information is given regarding wages. So we'll take the respective amounts. We'll take the respective amounts of October, November, December. So October wages are 22,000. So 22, 20, 30. 22, 20, 30. That's all. Over. Now take the total. A total we got, B total we got, surplus or deficit A minus B. 372 minus 310, 62. Surplus. 300 minus 506, deficit of 206, shortage of 206. Right? So there is overdraft facility required. Overdraft facility required of 2,06,000. 2,06, 2,06,000 overdraft we require in the month of November. Then here 240 282 minus 520, 240 is the deficit. Deficit, so shortage, overdraft is required in the month of December. Now opening balance. Opening balance on 1st October is given in the problem, 50. Add up 50, 112. 112. The closing balance of October will become opening balance of November, 112. So 112 minus 206, 112 minus 206, you will get minus 94. Minus 94, this will become opening, minus 94. So minus 240 minus 94, you will get minus 334. दोनों माइनस को ऐड कर देंगे तो माइनस 240 माइनस 94. टेक योर कैलकुलेटर, प्रेस माइनस 240 again minus 94, you will get minus 334. This is the closing balance of December. That's all. This is the end of problem number 18. Now see the 19th problem. Problem number 19. The expenses budgeted for production of 10,000 units in a factory are furnished below. Material. So for making 10,000 units, the expenditure per unit, material 70 rupees, labor 25 rupees, variable overhead 20 rupees, fixed overhead 1 lakh rupees, 10 rupees per unit, variable expense direct 5 rupees, selling expenses 13 rupees, 10% fixed. Distribution expense 20% fixed, 7 rupees. Administration expenses 50,000, 5 rupees per unit. So per unit total 155. Prepare a budget for 6,000 and 8,000 units. Administration expenses are fixed for all levels of production. It's a flexible budget. We are given the data, cost data for 10,000 units. And by using that, we have to make a budget for 6,000 and 8,000 units. So 3 columns we require: 6,000 units, 8,000 units and 10,000 units. It's a flexible budget. See the format here. Flexible budget at 6,000, 8,000, 10,000 units. So 3 broad columns we require. First broad column 6,000, second broad column 8,000, third broad column 10,000. So 6,000, 8,000, 10,000. So sub columns. Sub columns are per unit total. Here also per unit total. Per unit total. Now see carefully the format. Some costs are fixed and some costs are variable. So we segregate, we take all variable cost at one place, all fixed cost at another place. So variable cost. What are the variable cost? Material, always it is variable. Labor, always variable. Then variable overhead, name itself is given variable overhead, so we will take under variable. Then variable expenses, it is given in the problem, variable expenses. Selling expenses and distribution expenses. In this selling and distribution expense, some part is fixed and some part is variable. In the problem it is given, selling expenses are 10% fixed. 10% fixed means 90% variable. Similarly, distribution expense are 20% fixed. So remaining 80% variable. So some part fixed, some part variable regarding selling and distribution expenses. So these are the variable expenses. Take the total B. Now fixed cost. The fixed overhead, directly it is given in the problem, fixed overheads. So fixed. Selling and distribution. Selling and distribution are partly fixed, partly variable. So here I have taken under variable, here again I am taking under fixed. Last, administration expenses. It is given in the problem that administration expenses are completely fixed. Then B is the total of fixed cost. A is the total of variable cost, B is the total of fixed cost. The total cost will be A plus B. Right? Now, while making this budget, remember one point. The per unit variable cost will remain same. Variable cost will remain same per unit. The variable cost will remain same per unit. So it is given material cost. First of all, you have to fill up the data for 10,000 units. In the problem, that complete cost data is given for 10,000. By using the 10,000 units, we have to make the budget for 6,000 and 8,000. See here, the per unit variable cost will remain same. Variable cost are material. Material cost per unit 70 rupees given in the problem. So I have taken 70 rupees per unit in all the three. 70 rupees per unit in all the three columns. Now multiply 70 into 6,000, you will get 4,20,000. 70 into 8,000, 5,60,000. 70 into 10,000, 7 lakh. That's all. Per unit will remain same. The total material will change proportionately. 6,000 units बनाने के लिए 4,20,000, 8,000 के लिए 5,60,000, 10,000 के लिए 7 lakh. Proportionately increasing, but per unit will remain same. Labor. Per unit labor is given in the problem 25. 25 rupees per unit. So multiply 25 into 6,000. 25 into 6,000, you'll get 1,50,000. 25 into 8,000, 2 lakh. 25 into 10,000, 2,50,000. Similarly, variable overhead per unit 20 rupees. Per unit 20 rupees given in the problem. So 20 into 6,000, 1,20,000. 20 into 8,000, 20 into 10,000. Variable expenses. Variable expenses are also given in the problem directly, 5 rupees per unit. So 5 rupees into 6,000, 5 into 8,000, 5 into 10,000. Next one, selling expenses. In the problem, selling expenses are given 10% fixed. 10% fixed. So 90% variable. So 90% of 13 rupees. 13 into 90%, you will get 11.7. 13 into 90%, you will get 11.7. So 11.7 is the variable expense per unit. So 11.7, 11.7, 11.7. Multiply 11.7 into 6,000, 11.7 into 8,000, 11.7 into 10,000. Same way distribution expenses. The distribution expenses are given 20% fixed, 80% variable. So 80% of 7 rupees. 80% of 7 rupees, you will get 5.6. So multiply 5.6 into 6,000, 5.6 into 8,000, 5.6 into 10,000. We got the total variable cost. Now fixed cost. The total fixed cost will remain same. The total fixed cost will remain same. This point you have to remember. Total fixed cost. So first we find out what is the total fixed cost at the current level, 10,000 units. At 10,000 units. So fixed over at 10,000 units is 1 lakh rupees given in the problem. Similarly, selling expenses. Selling expenses are given 13 rupees, 10% fixed. 13 rupees per unit, 10% fixed. So 13 into 10%, 1.3. 13 into 10%, 1.3. So here I have taken 1.3. Now 1.3 into 10,000, 13,000. 1.3 into 10,000, 13,000. Right? Similarly, distribution expense. The distribution expense are given 7 rupees, 20% fixed. So 7 rupees, 20% fixed. So 20% of 7 rupees, it comes to 1.4. So multiply 1.4 into 10,000, 14,000. 14,000. Similarly, administration expenses are 50,000 rupees given in the problem. 5 rupees per unit. So I have filled up all the total. The total fixed cost will remain same, whatever be the level of activity, whether we make 10,000 or 8,000 or 7,000. The total fixed cost will remain same. So total 1 lakh, this 1 lakh I am taking same. Similarly, 13,000 rupees I am taking same. 14,000 rupees total I am taking same. 50,000 total I am taking same. The total fixed cost will remain same, but per unit fixed cost will change. How to find out per unit? This 1 lakh divided by 6,000, you will get 16.67. Similarly, 13,000 divided by 6,000, 2.17. 14,000 divided by 6,000, 2.33. 50,000 divided by 6,000, 8.33. Here also, 1 lakh divided by 8,000, 12.5. 13,000 divided by 8,000, 1.625. 14,000 divided by 8,000, 1.75. 50,000 divided by 8,000, 6.25. Right? Take the total B. Now A plus B you calculate, will get the total cost. This is the flexible budget. In the problem, 10,000 units data is given and we have prepared the budget for 6,000 and